Welcome to ForexTV.com's PM Exchange. It's Tuesday, November 20th. I'm Remy Hoki. Today I'm joined by Joel Kruger from Thomson Financial. Joel will weigh in on the latest FOMC minutes and give us his levels for the major currency pairs as well as the crosses. Good afternoon, Joel.
Hi, Remy. Good afternoon. Nice to see you.
Great to have you on the show today.
Thank you. Good to be back.
Well, this afternoon at 2 p.m. Eastern Time, the Fed minutes from the October 31st meeting were released. So first and foremost, before we go into price action for the majors, give us your take on the release of the Fed minutes as well as the economic forecast.
Sure. I think people were really caught off guard with the release. People were expecting somewhat more upbeat Fed minutes going in, and we saw a downward revision in GDP and downward revisions to inflation, and I think that caught the markets off guard, and we saw and price action sort of reflected that. I think it is somewhat misleading. We see that the people that were involved in the outlook right now might not have been the same people that were involved in the rate decision. There were more people involved in coming up with this outlook, so that what could be one possibility for sort of a little bit more of a downbeat tone to the minutes. And the other factor really is it's been interesting. The Fed minutes they highlighted the word that they used insurance for the rate cuts previously, and that sort of shows that they're playing both sides. That they cut rates previously as insurance, and there's as a preventative measure going forward. So it's really up in the air right now. They sort of played both sides well, and we'll see what happens going forward.
Well, after the release of the FOMC minutes this afternoon, we saw equities tumble, and we also saw the US dollar hit new record lows against the euro and against the Swiss franc. And although earlier in today's session and in the London session, euro dollar did hit a new record high. So if we could take a step back, and if you could tell us what was weighing on the pair earlier this morning.
Sure. It's been, to me, I've been amazed with the session today. We started out, the sentiment in Europe really was, dollar sentiment was really hit hard, and negative sentiment towards the dollar. Initially, there were rumors of a potential emergency Fed cut today, and that sort of gained some momentum, and that sort of sparked some initial dollar selling. And then another main theme, which I think there was more relevance to, was the GCC countries. Saudi Arabia, they had a recent rate decision, and their decision to leave rates on hold was somewhat of a shock to the markets, considering they're tied to the U.S. dollar. U.S. has been cutting interest rates, and their decision to leave rates on hold opens the door to possible speculation that they might be considering a revaluation. So that sort of spurred another round of dollar selling, and then into the morning we had some weak housing data, somewhat weak housing data, and the knock to Freddie Mae and Fannie Mac was not good for the markets, and that's sort of what led to additional dollar selling.
Well, Joe, let's take a look at the coming session. U.S. equities did end up higher today, with the Dow ending up above 50 after seeing weakness going in and out of positive territory throughout the day. But in the coming session, if you could give us your forecast for the major currency pairs.
Sure. I think that the key currency is euro dollar now, and the fact that we keep pushing new highs, it's just a momentum thing. People are long euro dollar, and for some reason it keeps driving higher on this momentum. 150 becomes the next key level to watch above. Initially 148.50, there would be some barriers there, but I think that 150 becomes the next level to watch above. At 146.35 below would be a key level to watch below in euro dollar. Dollar Swiss, 111.50 is a level that we want to watch above, and 110.70, we could be there right now. 110, 110.70 are key levels to watch below the psychological barrier at 110. Euro dollar and dollar Swiss notably making fresh highs and lows respectively against the dollar today. Cable 206.95 is the key level to watch above. That's a critical area above. That's the 10-day and the 20-day moving average are right up there. So I think that you're going to find some resistance up above there. With cable, we've been coming off since 211.60, so it's kind of interesting. Short term, we're still in this bear channel, and we're coming down. So cable, I think, should find some resistance by 206.95, and then 204.50 is the level that you want to watch below. And finally, dollar yen in the majors, 111.75 is a key level to watch above. Break above there might open some upside, but as long as we sort of stay down towards 110 into 109, 109.15 is the key level to watch below. That was a previous low, and should we break below there, that will probably open the door to significant moves lower.
Well, let's move on to the commodity currencies of the Aussie and the Canadian dollar. I do want to mention that NYMEX crude oil did surge in today's session and closed at a new record high of $98.03 a barrel. And in the past few sessions, we've seen Aussie yen make some massive moves, and dollar CAD did also trade lower following the FOMC minutes. But going into tomorrow's session, if you could give us your ranges for the Aussie and the CAD against the U.S. currency as well as the yen.
Sure. We'll start with dollar CAD. Dollar CAD again has been in a recovery mode since basing out by 90.50. And it continues to be, the dollar continues to show that it wants to go higher right now against the Canadian dollar. A lot of that has to do with their data recently starting to show some effect of the massive appreciation in the Canadian dollar. That coupled with this weekend's G20 meeting, one of the sort of most vocal officials was Mr. Dodge, who came out and basically was very. He'd been very sort of aggressive in terms of his outlook on the impact of the Canadian dollar on the economy, and we're starting to see that, and that's starting to be felt. So I think that the Canadian dollar CAD has more upside going forward. The level to watch above now is 98.85, and if we break above there, we're looking to go back towards parity and above. Aussie fundamentally, the outlook continues to be within the economy. It continues to be constructive. They continue to be focused on growth and inflation. They recently have hiked rates, and they continue to look to do that. I think the one hindrance to Aussie dollar, again, this week, there really isn't a lot on the table for data for them. So then the pair really is reflective of market sentiment and risk aversion. So should the equity markets continue to look to rebound off current levels, then we should see Aussie higher. Should the equity markets go lower, then on weak sentiment and a reduction in risk appetite, we should see the Aussie go lower and pressure levels below at 87.55 and below. As far as the yen crosses are concerned, they have been extremely choppy, all of the yen crosses, and really the primary driver of the yen crosses is risk aversion and appetite for risk. If the markets continue to show that risk aversion is on the high end, and they continue to liquidate their carry trades, then we will see the yen crosses, Euro yen, Aussie yen, Kiwi yen, and all the yen crosses drive lower on that. The primary driver has been risk aversion, and I think that right now, technically, the structures for all of the yen crosses remain bearish, and we just are in this choppy bout of consolidation and sort of looking to make that next break lower. So my outlook for the yen crosses is lower. Euro yen, the key level to watch above is 164.30, and if we break that, I would use that as sort of a guideline for the other yen crosses. A break above 164.30 in Euro yen might possibly open the door to a broader correction in Euro yen, moves back to levels that we had seen previously, the higher levels. But I am of the belief that we're going lower on the yen crosses.
Well, Jill, now that you've covered the yen crosses, one cross I also want to mention is the euro sterling cross. Do you think the pair is due for a correction? I
think technically, fundamentally, I think technically we are due for a correction. Fundamentally, there is a strong justification for the currency to go higher. We continue to see a deterioration in the UK economy. They did have some impressive manufacturing data today, but the key themes within the UK are the credit markets and the housing sector. And so long as they have that high exposure and they continue to show a deterioration on that end, and also the BOE recently, they really have had a dovish outlook, and people are pricing in cuts. So long as that is at the forefront, cable should and the GBP should continue to be pressured. And I think, and on the other side of the coin, you're looking at the euro. Officials are really still focused on inflation and growth, and they are sort of happy to see possibly looking at rates going higher. So when you combine the two, you see fundamentally euro sterling driving higher. Another factor with euro right now, which is game carrying headlines is the euro as a reserve currency. And I think that people, rightfully so or not rightfully so, are starting to give credence to the euro as a reserve currency. So we're seeing euro sterling drive higher. Technically, however, the key level to watch above is 72.55. I believe that's the August 2003 high, and I think that we should test that level. But intraday, we are overbought, and we do need to go lower, probably back towards 71 before we start a fresh up leg back to 72.55.
Okay, Joel, thank you very much for coming on the show today.
My pleasure.
And have a happy Thanksgiving.
You too.
This has been your Forex News with Joel Kruger from Thomson Financial. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended in positive territory in a very volatile trading session. The major indexes moved in and out of the red throughout the day as investors weighed credit market concerns, the latest FOMC minutes, as well as news that Freddie Mac had a $2 billion quarterly loss. The latest minutes from the October 31st meeting show that policymakers' decision to cut rates was, quote, a close call. In U.S. economic data out today, housing starts rebounded 3% in October after the steep decline in September. Meanwhile, building permits fell 6.6% to a lower than expected annual pace of 1.178 million. At the end of today's session, the Dow Jones Industrial Average ended up by 51.7 points to 13,010.14. The Nasdaq rose 3.43 points to close at 2,596.81, and the S&P 500 gained 6.43 points to close at 1,439.70. In the fixed income market, U.S. Treasuries gained ground, ascending yields lower after the Fed forecast an economic slowdown in 2008. The benchmark 10-year Treasury bond was up with the yield at 4.06%. The 30-year bond was nearly unchanged with its yield at 4.483%. And the 2-year note was up, yielding 3.156%. In energy, NYMEX crude oil futures ended the session up by 3.6%, closing at a record level of $98.03 a barrel. Prices hit a new record following the Fed minutes, and the dollar hit a new low against the euro. NYMEX crude oil for January delivery gained $3.39 to close at $98.03 a barrel. After the market closed, crude oil for January delivery hit the previous intraday high of $98.62 in electronic trading. In other petroleum products, December heating oil added 8.59 cents to close at a record of $2.6901 a gallon. It hit a new intraday high of $2.699 earlier. And December RBOB gasoline added 6.98 cents to close at $2.4515 a gallon. Meanwhile, December nat gas fell 31 cents to close at $7.477 per million BTU. Over in the metals complex, gold futures rallied, rising on initial dollar weakness and then due to the surge in crude oil prices. December gold rose $13.40 to end the session at $791.40 an ounce. In other metals, December silver rallied 34 cents to close at $14.50 an ounce, and December copper added 4.35 cents to $3.0270 a pound. And January platinum rose $12.60 to close the session at $1,469.70 an ounce. December palladium gained $3 to $364.30 an ounce. And that wraps it up for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.